The Alternative Investment Hour starts now.
Welcome. I'm Robert Kuhn.
And I'm Jeff Johnson.
What were some of your give me 30,000 foot overview. What were kind of the themes that you heard over and over again last night?
The people, number one, I took away from that would probably be market concerns.
So we're up potentially all-time high?
We hit, I think 2 of the 3 indices hit all-time highs.
Closing all-time highs. Yes, you're absolutely right. Last week.
Money never sleeps, pal.
2 out of 3. Yep.
And number 2, income. I mean, these people were nearing retirement age or in retirement age.
Sure.
And they're worried about the money lasting.
Absolutely.
Or learning how to generate income from that. And then, of course, my ear may have been more tuned to this than yours, but tax savings. Because that, to me, we've got an opportunity with the last tax law that was put in place, and it's only here through the end of 2022 right now.
Got it.
That you can make an investment and offset ordinary income, offset W-2 and 1099 income with an investment.
Sure.
Now that's that, and for those people that the SALT, state and local taxes, that they got hit by those, man, it's crazy. And in Texas, we don't have that, but still, if you can offset, if you're in a 37% federal tax bracket, that's meaningful.
Golly.
A lot's going on, Jeff. Let's talk kind of, geopolitical, and let's talk what's going on with what did President Trump do? Sanctions of some sort in the oil field? Yeah,
so, there's sanctions on Iran, but they kind of made some exceptions to that for a little while.
Okay.
And so Iran exports about 1 million barrels a day of oil right now. He just eliminated those. So I think they become effective next month, I believe. And however, I will say this, is I don't want to say cried wolf a few months ago, but he said he was going to put all the sanctions back on, and then they gave an exemption to it. So it kind of ruffled some feathers, I think, with OPEC and Saudi Arabia. So I think it's a wait-and-see approach, but he definitely needs Saudi and some other members of OPEC to be on his team. So I expect them to go into place this time, and you take 1 million barrels a day off the market, combined with Venezuela, Libya, and Russia, some other things if we want to get into it. I believe we're going to see prices go up. As an advisor, you're at an all-time high. Why would anybody not advise clients to pull some chips off the table?
Okay, well, we got into it kind of in the last segment that people will want comfort, Jeff. Mm-hmm. They don't want to buy when there's stress and anxiety, which is when you should be buying. They want to wait till they feel comfortable, and that means the market's going up. I'm going to get on my soapbox for I don't know how long, but cut me off.
Okay.
But
no, I'm just going to sit back and enjoy. Tell.
But before that, text PROTECT to 474747 if you want to get on our distribution list. Okay, so why do advisors, in my opinion, do they not tell clients to pull chips off the table? It's a complicated question that I'm going to try to answer with a couple.
It's a simple question.
It is, but here's first and foremost, Jeff. Would it surprise you that investment advisors, if money sits in cash for a period of time, they stop getting paid on that money, an advisor? So if I'm managing your money and I believe that now is the time to take 20, 30% off the table, put it in cash, not earning anything, but using it as a hedge and not losing money. At a certain period of time, I'm going to get a notice, especially if I work for the big firms. I'm going to get a notice every single day that you've got this many days to put that money back to work, or you're not back in the market, or you're not going to get paid anymore.
You can't be serious, man. You cannot be serious.
So think about that. You're asking somebody to consciously reduce their compensation.
By definition, that sounds like a conflict. Well, there's one ad now, I don't want to say who it is, but it comes on the TV and it just says 99% of the time, if you never get out of the market, you'll eventually make money.
Sure.
Well, crap, a broken clock is right twice a day.
Well, you're absolutely right.
Well, that tells my age because now they're all digital. There used to be a clock with hands and that sort of thing.
Yeah, you bet. And if you have that type of relationship where you're not hearing from your advisor, or more importantly, Jeff, let's get into, if you're not hearing from your advisor, text PROTECT to 474747.
Let me say this, because we do have other advisors that, Epis works with and you work with.
Yeah, sure.
And that's, so
there's
the ones
good
that
ones out
we're
there,
working with, they truly, I believe, have their client's best interest at heart.
Well, don't you think?
And I'm sure a lot of them do. And I'm not trying to defend. I'm just trying to play both sides of the fence here a little bit.
Yep.
Is it may be industries get a certain way and you get a certain mentality. Oil industry is the same way.
Sure.
Good point in case debt, and you're about to see a flurry of bankruptcies.
You bet.
You've already seen 2 or 3. And it may be the same way in financial services, just the industry has gone so far one way, it's just accepted practices.
Well, Jeff, here's the guys and gals that we work with, Jeff. They're great people, because generally speaking, if an advisor is going to want to learn something new, it takes time. And I give the individuals that we work with a ton of credit. So there are good advisors. Unfortunately, there's probably more bad than, I don't want to say bad, but ones that aren't adding value. Let's just leave it at that. Because your statistic, Jeff, well, it's my statistic, but what you just said, think about this. Everybody gets in a rut. Statistic that just came out, Jeff, Vanguard, big, huge mutual fund shop, great company. They captured half of all inflows in the first quarter of this year.
All the inflows of cash
invested
into the market?
Dollars, half. You had one company capture 50 cents out of every dollar. And here's what that tells me. Vanguard has built their reputation on being very passive and just owning the index. All right. What happens, and this has nothing to do with Vanguard, they're great, but what happens when the economy changes and all of a sudden the buying dries up? Think about how quick this market could elevate or down.
It's going to be a herd mentality. It always is. Once you start getting momentum one way or the other, it's hard to catch a falling knife.
Oh, it is.
I don't like losses, boy. Nothing ruins my day more than losses, boy.
You know what, Jeff? I wanted to get to the 3 biggest mistakes.
It's also stupid to try to catch a falling knife, by the way. You're going to get cut up and hurt. Let it fall, let it drop, wait for it to hit bottom.
There you go.
Then pick it up. Yeah.
But to your point, Jeff, everybody advertises that statistic. I've seen it 100 times. If you haven't seen it, that it's time in the market, not timing the market. And it basically shows your return goes down the more days it's totally self-serving to Wall Street because they want their fees. But if you want to see that statistic, it's great. It's easy. It's a quick read. Text PROTECT to 474747. And if Jeff doesn't go off on a tangent next segment, we are going to talk about the 3 biggest mistakes individuals make.
Investing is hard. Harder if you only have one strategy. You've been listening to the Alternative Investment Hour. Stay with us. Jeff Johnson and Robert Kuhn will be right back. It's time to get back into the conversation with Jeff Johnson and Robert Kuhn. Welcome back to the Alternative Investment Hour.